Welcome back, guys. In today's video, we are going to discuss about the roles of regulator, intermediaries, what is the trading mechanism, what is IPO, and beyond stock markets. And in this video, I'm going to cover the full basics of stock market. In the last video, we discussed why there is a need to invest your money into equity and how equity can beat returns compared to gold and other fixed income instruments. So let me get straight to the topic. In India, for example, everything has its own regulation. We all are regulated by law, which is written under constitution. In for securities market in India, SEBI, Securities and Exchange Board of India, is the regulatory body which protects the interest of investors. It promotes the development of securities in the security market and it ensures that fair practices happens in stock market. What is the role of SEBI? So SEBI is trying to protect the retail investors, it's trying to protect the corporates, the big companies that are listed on the stock market so that anything wrong should not happen to all those companies. In the recent days, we can see that SEBI the, is doing a case on Hindenburg against the short selling of Adani stocks. So we can see that it is protecting the rights of corporate as well. We can see in the Adani episode that like because of all this short selling news, the stock was down almost 70%. It wiped out almost $130 billion of the conglomerate Adani. So we can see that how SEBI protects its investors, corporates, and it ensures there is fair practice in the markets. So what are financial intermediaries that comes under stock market? First is the stockbroker. Stock, for example, let's take an example of a fruit shop. We go to the fruit shop, we seller, we are to buy fruits. We are not directly going to the farmer, the end farmer who's producing the fruits, because because it is not accessible for us to directly go. It's not feasible, it's time consuming, it's not at all possible for us to go to the local farmer and buy the fruits. Instead, what we are doing, we are going on the fruit shop and we are buying from there. So that is exactly the work of stockbroker. Stockbroker is the link between the end consumer and the markets. So stockbrokers helps us in doing financial transaction, and it helps us make buy and sell signals and helps in placing us order to the markets. So financial intermediaries plays a crucial role in the stock market ecosystem. Together, the financial intermediaries interdependent on each other and that create an ecosystem in which the financial markets exist. So I was telling about stockbrokers in India. There are highly reputed stockbrokers, and the business is super good. For example, Angel Broking, Zerodha, Sher Khan, they have been into existence from quite a few years and they are making robust profit. As of my understanding, Zerodha made about 2000 crore in FY23 just profits, and they had a revenue of 4000 crore rupees. It's quite heavy business to just earn from straight brokerage. They are not even investing, they are not even trading into the markets. They are just making making brokerage, making a business out of people doing multiple transactions in the market. So what kind of business is that? Another type of financial intermediary that exists in stock market is asset management company. Management company collect money from the public, can invest in market with the help of their expertise. You and me cannot research on stocks and do trading and gain financial gain out of it. But there are jobs which specifically target those kind of roles. They are into markets for a prolonged period of time and they try to make a better return than index. So they offer mutual fund schemes and they charge some kind of payload, exit load, and some kind of chargeable fees, and they make money out of our pocket. So they pool investment to diversify risk and optimize return. HDFC, AMC, Reliance Capital, SBI Capital are some of the listed companies that are governing under asset management company as a financial intermediary. Next is depositories. So depositories hold securities in electric form and facilitate their exchange. For example, there we deposit our money into bank, so we have certain security that our money is not going to go anywhere. Similarly, in stock markets, depositories, CDSL, NSDL, these are the repositories of the two biggest exchange, and they hold our securities into the stock markets so that so that our securities won't go anywhere. They maintain demat accounts for investors. Next is depository participants. So, in order to facilitate the whole transaction, when I am trying to buy shares and someone is trying to sell his shares, the whole transactions involves a depository participant act as an intermediary between the investor and the depository. So that CDSL and NSDL to contact the bank, just assume to contact a bank, I need a phone. So depository participant act as a phone between me so that I can facilitate the transaction. For example, I'm doing a transaction using UPI. So that UPI interface is the depository participant, which is allowing me to do the transaction. It assists in opening and maintaining demat account. It facilitates the transfer of securities. It provides report on holdings and transaction. Most banks and several stockbrokers are depository participants in financial market. Other financial intermediaries include CRAs, merchant bankers. Merchant bankers helps us in listing IPOs, well, CRA, credit rating agencies such as CRISIL and ICRA give rating on on certain companies bond securities that this is a company which is worth investing in, or like it won't take away the investors money. Section 3, the IPO market. In India, an initial public offering is the process through which a private company offers shares to the public. For example, for the first time, I am listing my company into the stock market. I need to do IPO, initial public offering. What is the purpose of IPO? It helps us in raising capital for expansion and growth. The first type of money, if you imagine, let's take a scenario. I am having a textile business and it's 50 crore rupees of business. That means the market capitalization, including all the assets and liabilities that I own, is 50 crore rupees. For example, this money I took from seed funding. With the help of families and friends, I was able to set up a textile business. But in order to expand this business, I went into some venture capitals, private equity, in order to raise more capital. Now, my market capitalization, my business grew, and my market capitalization is somewhere around 100 to 500 crore rupees. But now I want to expand my business further, but I do not want to dilute my equity within some private shareholders. I want to have my shares in the public market so that they can their worth can be increased and I can raise money from the public. What are the benefits of IPO? It access to a large pool of capital. All the top companies in India are listed on stock markets. Go and check the Nifty 50 companies. It includes Reliance, Adani Enterprises, TCS, all the major companies, ONGC. These companies are listed on stock market and they have access to a large pool of capital, and it gives liquidity for existing shareholders. For example, I want to exit from a company. As a private equity firm, I have, for example, 5% ownership in my textile business. Like, imagine a private equity firm having 5% ownership in my business. How can it sell its stake? It can only sell its stakes when it is listed, when there is enough liquidity for that 5% stake to be sold. So, what companies usually do with the IPO is that they exit. The IPO helps us in exiting from the ownership of a certain business. Next comes, what is the IPO sequence? What are the chains of events that helps a company listing to the stock market? First, appointment of merchant banker. The company appoints a merchant banker. The also known as book running lead manager to manage the IPO process. Basically, you go to a merchant banker, you will submit all the kinds of reports, your profits, what is your liabilities, how the company, what is the gross profit, not net margin, and the merchant banker helps us in listing our company to secondary market, that is stock market. So IPO is basically primary market, and stock market is a secondary market where we exchange shares between us. In the IPO, it is a fresh issue. That's why it is listed in primary market. So what is the process behind it? First, you go to a merchant banker, then with the help of merchant banker, it submits the application to the SEBI. The statement includes details about the company, its business, financial health, and the reasons for going public. Lately, SEBI has been trying to list as many as companies, and once SEBI approves this application, it goes to SEBI approval, and SEBI reviews the registration statement and decides whether to approve the IPO or not. Next, draft read, hearing, prospectus, and marketing. So, if SEBI gives initial approval, the company prepares DRHP report. It contains detailed information including the estimated IPO size, the number of shares the company is going to issue, reasons for going public, and fund utilization plans. That how the company is going to utilize funds, whatever it is trying to take from the market, where it's going to spend it. Business description, financial statements, management analysis, risk and management background. What is the marketing? Marketing the IPO. Next is marketing. In marketing the IPOs, companies usually print ads on newspaper, on social media. You hear all the TV news channels making a buzz about some kind of IPO. Last IPO, I was hearing about Idea Forge and this Irida, like from 30 rupees listing it now today the LTP is 210, almost seven times in less than a year. Like it's been 5 7 months. So this process known as IPO roadshow involves presenting the company to potential investors. Next, section 4, the stock market. So now we have discussed who are the financial intermediaries in the stock market, why there is a need to invest. Now let's look at what we see into the stock market, a platform where shares of publicly traded companies are bought and sold. I have a Demat account at my hand. This is from Alice Blue. So you can see in the home section that I am getting all sort of information that what is my portfolio size, what is how much is the amount of funds I have, and the financial intermediaries include banks as well, because banks, like with the help of banking, you can put your funds, add funds into your Demat account, and from Demat account you can do transactions in the financial markets. So one of the financial there are more than four financial intermediaries in the stock market, and which includes banking sector as well. So in this you can see there's Nifty listed on. This is Demat account. This is called brokerage app, and what right now I'm using is Alice Blue Terminal, and you can see from monthly chart that how Nifty has performed. We'll go into the practicality of stock market. I've been just blabbering about what is this, what is that, but let me tell you what it is actually. From from 2019, you see this is the dip because of COVID. And if you would have invested just in Nifty index, what are the percentage return you would have expected after the fall? The market has given almost 200% return from the COVID pandemic. So that is quite huge percentage if you just had a knowledge that okay, this crash is for a very short period of time and the economies all around the world are going to recover, and you would have that view in your mind, you would have made actually 200% just in investing and in as simple as Nifty 50 stocks. So, with the help of stockbroker, you can access what I'm trying to tell you. You can access stock market. So it facilitates the exchange of securities, providing liquidity to investors. It includes individual investors, institutional investors, brokers, market makers. Next is what moves the stock. So I'm a student of economics. So how do we come to a price that, like, what is the value that, how we come at the valuation of a certain thing? Let's again take the example of that fruit seller. For example, I'm trying, I want to buy 1 kg of apple. So it's going to cost, so the fruit seller is telling me that the price of 1 kg of apple is 200 rupees. But obviously, I want to save up some money, right? So I will try to negotiate with my bright skills, and then I'll try to say, okay, I will just offer you 170 rupees, and I'm not going to give you any penny above that. So at the end of the day, what we are trying to do is negotiating. He's trying to give some kind of buy price. He's trying to give some kind of sell price. I'm trying to give some kind of buy price. Obviously, the seller wants the price to be as high as possible, and the buyer wants it as low as possible. So at the end of the day, what we figured out that I will, like, at the end of the day, we fought, and lately I bought the apple at 180 rupees per kg. So my buying price went up 10 rupees, and he lowered his price 20 rupees in order to make that transaction. Exactly, that is how stock markets move. There are buyers, there are sellers, they're fighting, buying, selling, buying, selling. It is about a stock, it is about index, it's about every damn thing that is present. So exactly, stocks move with the help of buying pressure and selling pressure. If you are thinking that Nifty is going up in the chart, so there's enough buying pressure that uh, people are willing to pay more, and sellers are, so the buying pressure is more and the selling pressure is less, and that's why the index is moving up. So people are bidding more price and asking for less price in order to do the transaction. Next, so what involves investor perceptions and market sentiments can drive stock prices. So there are some kind of perception that we have that, defense sector is going to go up in the recent budget, or there are market sentiments that, okay, this is a bad news. COVID was a bad news. The market sentiments were terrible at that time. Because of that, the stock markets fell. So what drives stock market, and we tell that stock markets are forward looking, they are looking at the future, and looking at the future, they are deciding the prices right now. You can just look at the charts of all over the stock markets around the world. Dow, Nikkei, this Tokyo का this Japan का is Nikkei, China का is Shanghai, and Germany का is DAW, DAX. So looking at all these broader indexes, you can just look at the sentiments that how all the economies around the world are behaving. And as I told you, because of the demand and supply basic principle, it helps us in determining a particular price. So when demand and supply interact, it gives output as a price. How stocks are traded? Order placement. First what we do is first we place an order to the markets. Then the if that particular price is matched in the market, if there is a buyer, if there is some kind of buying for my selling, or selling for my buying, then the order matches, and then the order takes place. In the demat account, the settlement takes place. Usually in India, it's T plus 2 settlement. That means transaction plus 2 days. And ownership, buying a stock makes you a part and owner of the company. So don't forget, at the end of the day, what we are trying to, what game we are in, it's not such a game of making money. It's actual real companies making huge profits, looking for business expansion, taking risk, and going anywhere to protect their shareholding, to protect their money, and at the end of the day, make our money as well. So, what are the benefits? Shareholders may receive dividends, voting rights, stock split, bonuses. There are a lot of things that a stock offers you. And holding period depends on the investor. investors can hold stocks for varying periods from minutes to forever. That is the power of stock market, I would say. Calculating returns and investors' role. So, how do we calculate returns? So, there's one thing called absolute return, and one is called CAGR. So, absolute return is something that the stock price from 2000 went to 2500 rupees. So, the absolute return you made, sorry, in this transaction is 500 rupees. This is absolute return. But CAGR takes into account the time period for more accurate comparison of different investments' performance. CAGR helps us in seeing the view of what is the percentage of return that a stock gave in an year. From 2000, it went to 3000. So, what is the CAGR? So, the CAGR is 50%. So, it takes into consideration time as a variable as well. So, active and passive investment. Decide whether to be an active trader or a long term investor. Uh, Research and strategy. Conduct through research and develop strategy aligned with financial goals. In trading, investing, there are a lot of strategies that individuals and traders try to make and gain some kind of benefit from the market. Monitoring and adjusting. So, regularly monitors investments and adjust the portfolio as needed. If some stock is giving you less percentage return, if some stock is giving you more percentage return, you need to monitor and adjust. And but if your view is long term, if you have done through research with the help of your strategy, you don't need to even monitor and adjust your portfolio because you have full faith in that particular company that you have invested in. Section 4, the stock markets index. The stock market index. Stock market indices represent the performance of a group of stock. They reflect the general market trend, serve as a barometer of for market health. So there should be something which from where we can uh, you know we can compare our returns. So index helps us in giving some kind of comparison. If an index has given 14% CAGR from the last 30 years, so we can compare with the help of this data that my how my stock has performed. So indices comprises of stocks, so it's a particular number that comes out of calculation, weighted calculation according to the market capitalization of all those companies. In case of Nifty 50, there are top 50 companies according to their market cap and weighted average the particular figure, and you can just look at the particular figure and see the overall performance, and you can comment on overall market that today that market was bullish or market was bearish. If the top 50 companies gained some kind of money from the market, like all of them ended up in green, ended up being higher at a higher price compared to yesterday, then the overall index has moved up. So you can just see, okay, the markets are doing well. If the overall index is down, you can just look at the index and tell that, okay, at this time the index is not performing, or the stock markets in general is not performing. They reflect the general market trend, and it obviously, I told, it serves as a barometer for market health. So in major Indian indices are S&P BSE SENSEX. This comprises of 30 top stocks listed on BSE, and SENSEX is called Sensitivity Index. And CNX Nifty, it represents the NSE, consists of top 50 stocks. In other words, it's Nifty 50. There is Bank Nifty, there's Fin Nifty, there's BankX, and there are a lot of indices in Indian stock market. Bank Nifty is of top banking stocks. Nifty is of top finance stocks. BankX is, just consists of banking stocks. BSE midcap, it consists of only the midcap companies. So there are a lot of indices, and looking at the all those different indices, you can look at the particular sector performance. You can look at particular overall market trend, how the large caps are performing. Large cap basically is the blue chip companies having market capitalization of a certain level. Mid caps is having market capitalization of certain level. Small cap is smaller companies. and we will delve into all these minute details. Constructing the index. So how do we construct the index? All these, I told you, all these companies, like we do some calculations and at the end of the day we come out. So important companies across key sectors. So, and how do they monitor? Continuously tracked to provide markets insight. These index are tracked and actually index like have been traded in. You can actually put a bet on index. You can buy futures, you can buy options on the index in order to make financial gain. You can bet, okay, Nifty is going to go up in the next month or in the next year, and I'm going to put my options, my futures, and I can make financial gain and make more percentage compared to the average index fund. Real-time market insights. So minute by minute reading shows changing market expectations. The markets can go up in the first 30 minutes and go down for the rest of the day. Yes, the index performs in real-time market insights. It gives us what is happening every minute, what is the sentiment in all over the world. The index movement up indicates optimism and down indicates pessimism. As I was telling with the Nifty 50, the up movement from 2019 till now, the last 5 years, it has given 200% return. That means India is on a good path. Everything is optimistic from our side. There is nothing bad going on in the economy in general. So practical use of index. So indicates economic trends over time. So there are economic cycles. There are boom. So benchmarking, it measures performance against the index. And trend analysis, it shows market optimism and pessimism. Next, the trading terminal. A trading terminal is a software enabling market participants to transact in the stock market. In our case, it's Alice Blue, and it access methods. It calls the stock. You can call the stockbroker. You can use a web browser. You can use the trading terminal software in order to do transaction in the stock market. What are the major Indian indices? So these major Indian indices, I think there's something wrong in this PPT, but what is the purpose of overall of the trading terminal? So the purpose of this is transact in shares, track profit and loss, monitor market movements, manage funds, like you can add funds, you can withdraw funds, you can track your P&L, how I'm making profits or am I into losses, or it can monitor market movements. It can you can access. There are a lot of trading tools right now. There are APIs where you can do algorithm trading, and we are going to discuss everything in the coming lectures. Stay tuned for all of that. So next, section 4 comes clearing and settlement process. So what is the importance of this? Understanding mechanics behind trade and clearing settlement. Handle the process. Professional intermediaries handle the process for traders and investor. What is the objective of clearing and settlement process? So it ensures smooth settlement and efficient clearing systems. So, for example, buying 100 shares of Reliance Industries at a rupees of 1,000 per share on 23rd June would require total 1 lakh rupees of capital. So the broker first debits that 1 lakh from your account. It places a buy order, the total buy value plus the applicable charges by the end of the day. So, and your transaction, when someone is, ready to sell Reliance share, 100 shares for rupees 1,000 rupees, then it matches the transaction. And then with the help of the DPs, the depository participants, the CDSL and NSDL, it gives the shares from the one who's trying to sell the share to the one who's trying to buy the share. It gives the ownership of that share through depository participant. So it ensures guaranteed settlement of trades. Now, I think there was like I don't remember if I would have placed a buy order and it got completed from the terminal side, the broker terminal side, and it never reflected on my demat account because it ensures guaranteed settlement of trades. There's no glitch in between. If you are buying some kind of securities, like trust me, the SEBI is super duper good. that it helps us in guaranteeing the settlement of trades if there is any kind of uh, if there's any kind of glitch or some kind of fraud that you are trying to so there is scores SEBI ka, where you can register complaint, which broker you used, what happened. You can mention every detail that why that you are not able to access these things. They have made it super good, so you don't need to worry about the settlement process. What I'm trying to say in general. So ensuring no defaults by either party in the transaction. Like in conclusion, understanding the roles of regulators like SEBI, so you can actually put your money without any fear into the financial markets. Obviously, you should put into the right instruments. What I'm trying to tell, the system itself, there is no glitch in the system. All the brokers are doing fabulous job. Actually, there like I have been into markets from last 3 4 years, and obviously there is some like IFL went into some kind of restriction from SEBI that they cannot open demat account. But what I'm trying to say in general is the SEBI is doing its work, its job very good. The stockbrokers are very good. They are very helpful, and you won't be, facing any kind of difficulty placing orders in the market. These components collectively ensure that there is smooth functioning and integrity in the stock market, protecting investors' interest, facilitating efficient capital market. By grasping these concepts, investors and market participants can make informed decisions, thereby contributing to a robust and transparent financial ecosystem. And like whatever the stock's name I told in this particular section, there's no kind of investment advice that I'm trying to poach in. So read the guidelines carefully, and thank you.